Hey, good morning. This is Julie. It's Tuesday, August 30th, and there's nothing going on this week at all. It's very flat. Everyone is waiting for the NFP report Friday. Everyone is on vacation. I would highly recommend that you just relax, chill out, and only take high probability trades if you're going to trade at all. The markets are in a transition, and I'm going to show you that. That's sort of what I wanted to talk about, and show you some of the things on my solver. This is my website, and you can scroll through the screenshots that I post periodically. Go to the live charts real quick, and you can see that currently crude is still in that uptrend, weekly, daily, 60. We pulled back on the 15-minute on this pullback right here, and we're going below the yesterday high. Here is yesterday close. High probability chance that we'll get back into this previous area. And this, let me pull this over, is why we're really in a downtrend in crude. And we just hit the top of our volatility band. Now we did close above it, reaching up to yesterday 127, but we're pulling back. So if we do push up, it's going to be to this yesterday 161.8 prior point of control of this value area, but you can see we're in a downtrend. We're in a retracement in this downtrend, and if you take the high, pivot high to the pivot low, you're going to see that this yesterday 161.8 is right sandwiched between the 61.8 and the 50%. So this is like going to be a really high probability target. But here is the yesterday close down here, so we could probably do something like this. And then end the session. Maybe. It's fun to think about which way price is going to go. But the best thing to do is just use, for me to do, is just to use my template and pick off these high probability trades with trends, super inflections long. So when I have weekly, daily, 60-15, I want to take either reversals long, that gets everything, just get me long, or wait for the high probability with trend inflections, and that keeps you out of the middle part. So either way, this is the goal right here, with trend, with momentum, pullbacks. So after a pullback and it takes off, my template will give me a signal that that's when I want to get back in, and the stop is behind that pivot. Okay, so these are my bread and butter setups. But with that said, we have to be very careful with this because we are in a downtrend. Now, if we reach up for this, if we reach up for this 161.8 at the PPOC, that's the prior point of control, then we're going to be in an uptrend on crude. So when you're in a new uptrend on the super trend, a new uptrend, you wait for that impulse push up. That would be the impulse. Then you wait for your pullback, and then you go. So that second trade sweet spot, right? So we would move up, we would pull back, and then we would take off. So this, with trend, if you can get a with trend set up on the lower time frame, that's where you want to position yourself. On a super trend change in direction, that's that first change in direction after a new trend. I think personally that crude is toast and it's coming back down, but what do I know? I mean, that's just, my personal opinions, and I've learned long ago not to trade my personal opinion. But if we turn down at the yesterday close and it keeps falling, this thing is going to run really well today, and it's going to keep going and going and going. So if we go to the yesterday close and then we just keep going, the Fibonacci rule is if you turn at 38.2, there's a very high probability chance that you're going to break that low by a mile. So we could hit yesterday 200, or the S3 yesterday 200 to the downside, or the yesterday 261. So we could really get some good market action, but this is probably not going to happen. There's nobody trading. Everybody's on vacation. So more likely we'll just be in a small, bouncy blah. I don't know what's going to happen because there's nobody trading. Everybody on vacation. But the European traders are back from being off yesterday on vacation, so there may be some pent-up desire to trade. We'll have to wait. But right now, the big trend is really down. It's inflecting off that super trend back to the downside. So just watch out what's going to happen today, and reserve your spots. There's nothing wrong with just finding a market that's trending. And once you find a market that's trending, you want to make sure it's above the previous close. If it's trending higher and it's printing a negative number, like right here, the UB, the big bond, don't trade it because it's counter trending. This is what you want, all down and a negative print. So we could change over to the gold market, set the template to take those short, which I will do. Since we're all the way printing, I want to change this to short, excuse me. I'm going to put it on reversal short, and each time it gets in, then you can get in. So we're in a new reversal short right now at the 1 hour initial balance. So this is actually a good time to be getting short in gold. I hate chasing. I hate getting in the middle. But, and then your stop is above that pivot. So it's a little bit long of a stop. But a very good opportunity for sweetheart trade to the south. So that's how you do it. And you want your confirmation on your higher time frame that you are indeed in a downtrend. And I posted earlier on Twitter that most of the hedge fund managers are now short in gold. So as you see, gold is coming down. But we are in a squeeze. We're not really in a downtrend. We're in a range. So I would want really for this to be trending below 1320 to the downside, so it could be bouncy in here. You want to be on the right side of a trade, like right here. See how VWAP acted as the pivot? So I want to, before I leave for the day, I want to show you the weekly without my Heikin-Ashis. This is a straight out weekly E-mini chart, and that 2193 volatility level that's been printing since we broke through this level here. And price came right up to my volatility level and bounced. These levels are on my chart for a very good reason. You want to trade in that overall trend. I think this will get pierced on non-farm payroll. These stops will get swept. But then it's going to be a big drop, and then we're going to be off to the races to the downside. So you're going to want to be able to see how to trade the E-mini to the downside using this methodology on being able to spot when price rolls over for a favorable downside move, and then you can take your reversals short on, or your inflections just with trend inflections, and just take the meat of the move, get in and get out. You don't have to take a 200-mile trade to make money trading. You just need to know when the market is set up. Weekly, daily, 60-15, you're on the right side of the previous close. Set your template up to take those pullbacks using these custom bars. Get your money and get out. Put some position size on it. And you can do this every single day. Wash, rinse, repeat in these markets, because you've got your market analyzer with your custom coding. You can flip in and out of these markets, see which ones are trending, go to that market, and then just start hitting them. Get your money, get out, go to the next day. Set it up on an automated strategy with Raven, or just trade it discretionarily. Either way, Blackbird is coming out August 30th. I will be demonstrating that. There's going to be a big Blackbird party. Several of the Shark Indicators partners will be demonstrating their indicators using Blackbird. I will be also offering Blackbird if you would like to purchase it through me with one of my trading templates. I'll have that information on the website shortly, and as well as a lease option. So for those of you who don't have not purchased NinjaTrader or Shark Indicators, I'll show you how you can get the software on a lease so that you can kick the tires before you purchase it. But trust me, I have tried to set up my templates to put the trades in our favor. These are not tied to moving averages. These are not tied to the MACD or any of that other crap. These are tied to how the market actually trades on pullbacks and getting in the market in the direction that it should be moving. And I give you an indicator on momentum to be careful on those divergences, that when price moves above that zero line, you should always be looking at your indicator to see what it's doing, because you don't want to be taking a short trade when price is moving. Momentum is moving in the opposite direction, and momentum is just price. I mean, momentum is just telling you what price is doing, but you can see when the momentum, the volatility, the volume of momentum is drying up to the downside, because you have that lower low or double bottom, but you have a much higher low in momentum. So I would not be pressing any more shorts. I would wait for that momentum to flip back around and then get back in my trade on another pullback. So many ways to use my templates wisely, making decisions on how to trade. These, just flip back through my chart, and you can tell just from my screenshots that this is a methodology that you too, as a trader, if you're a day trader like I am, trying to get money out of the market on a daily basis for a living, how are we going to do that? And this is about as best of a program as I have found, so I'm very glad to offer it and share it with everyone. You can't fake this stuff. This is not something that a hedge fund can say, oh, I see what they're going to do, so we're going to steal it from them. This is just pure price action stuff. This is not a MACD hook or something that they can anticipate those moves and go in and try to shake you out of a level. This is just putting what actual momentum, price, and volatility are doing and taking the trade on the pullback. And in gold, just going from there to there, you can make $100,000 a year if you can do it every day. So with a very good risk. And trading is all about defining your risks and making sure that you're entering with the odds in your favor. So very good. That's enough of the lecture. Let's look at the rules, terms, and disclosures on the website. Risk disclosures. There we go. And again, like I said, there's very low volatility this week. Be very, very careful. In fact, if you would want, like I'm going to do, I'm going to trade Friday non-farm payroll and look forward to next week when the volatility will be back in the market. Thank you so much. Y'all have a good one.